Hello and welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, we're taking a look at a pattern called a cup and handle. Pretty straightforward pattern. You have the market kind of doing this, where some will call this a rounding bottom. So the market is drifting, and then it peaks back up. The next part of the pattern is a bit of consolidation. So the idea is that it looks like an old teacup or an old coffee cup. There's the cup, there's the handle. So how do you trade it? Well, it's pretty straightforward, really. First off, it's got a measuring stick, as it were, from the top of the cup to the bottom of the cup. And once you break this little bit of pullback and consolidation, that's your target, the handle. So you break the top of the channel here that makes up the handle. You put your stop loss on one side, and then you aim for that target on the next. Obviously, there are other ways you can do it, but that's the classic definition. Now, the thing about a cup and handle is there is a little bit of artistry involved. So this is a daily chart of Bitcoin. And you can see we've got a rounding bottom and a handle. So once you break above the top of that handle, stop losses go back there. You're aiming for the same length here, which is right about where it did target over time. Obviously, as a scalper, you're not going to be using daily cup and handle patterns, but they do happen on shorter time frames. It is probably just as common because, like right here, you can see there's the cup, there's the handle. Once we break that, your target is going to be from the top of the cup to the bottom. We hit that. We not only hit that, but we blew through it. So you can see how that works. Let's go ahead and take a look at it's another random chart. Phantom. And I will say this. So this is a cup with handle pattern. I would call it that. However, ideally, you want to see it more gradual than what it is, but it does play out the same way you would expect it to. The idea is more or less you're seeing a market that's slowly kind of building up buying pressure, and then you can follow right along with it. Something that takes a little bit of time. The classic technical analysis books will show like a stock that is doing it for like 9 months. Obviously, as a short-term trader, you don't have that kind of time. You're not looking at those types of time frames, but certainly, it makes it easier to recognize on a chart. Here's one here. It's kind of like this, like that. You break the top of that, and you're aiming for the height of the cup, which we did hit. Now, those of you that are a little bit more astute are going to say, well, isn't that a double bottom? The answer is yes. It's a little bit of both in this particular case. There's also support here, so that makes a certain amount of sense as well. So in this next video, what I'm going to do is I'm going to take this cup and handle pattern and show you how I would analyze charts and place trades. Hello, and welcome back to Cryptocurrency Trading, Mastery and Scalp Trading Strategies by Wealthy Education. In this video, a little bit of an example video here for cup and handle trading opportunities. So you can see that the market did one of these cup and handle patterns. It was a little bit messy, but it was still a cup and handle pattern nonetheless. You measure your move and you aim for that target, which you did get. So here's the question. Was there something else telling you that this was perhaps going to be an area of interest? Well, we can put our moving averages on. Notice how once we break above the handle, the moving averages, the 9 and the 20 spread out. So that's a sign as well. We can also take a look at the MACD. And the MACD certainly started to rise as we put this handle. We crossed again, but once we took off, we crossed yet again and started to see some positivity on the histogram. Huge signal? Maybe not, but certainly it looks like there were some signs there. go to Ethereum. So here is cup with handle. The measured move would be from the top of the cup to the bottom of the cup, as you would expect. And that opens up a move to about 1890. Interestingly enough, 1890 is an area of previous noise. So let's go ahead and mark that. So it goes to red about there right away. Moving averages spread out quite nicely. And of course, your MACD started to drift higher as we were going along, and it crossed and then it spread out really quickly as well. So yet another reason to think that perhaps we were going to see some movement to the upside. And finally, let's take a look at land. So this one is going to be a little choppier in general, but we will find our pattern. Find you an example here. A poorly drawn example. Let me get rid of that. Okay, let's try this again. Here we go. There's your cup with handle. Let's take a look at the potential move. That's right, the very first target we hit. But notice how the moving averages were already spreading, telling you that perhaps something was going on to the upside to begin with. That being the case, you also have to look at it through the prism of, this being significant support underneath right around 1680 or so. Now, you'll notice I didn't use the stochastic oscillator, and that makes sense because the stochastic oscillator is for range-bound markets, not a market that's breaking in one direction or the other. Nonetheless, pretty straightforward. The next video, I'm going to be talking about flags and pennants, and these are very common patterns that a lot of traders like.